Now, the recording is in progress. Thank you very much. Colleagues and friends, research has divulged that, over 70% of businesses, the small and medium enterprises, don't live to see their fourth and fifth birthday. That is to say, most of the businesses, about 70%, that is over 70%. This is according to research that has been conducted so far within Zambia and outside Zambia. Most of those small and medium enterprises don't live beyond 3 years. Okay, that is to say, to make it very simple, if 10 people started a business today, count 3 years from now, about 7 of them would have stopped running those businesses, and only 3 of them would have continued running the business. And what is shocking is the further empirical studies have been conducted, finding out what could be the reasons as to why. What has come out? It is very shocking that one of the leading factors that has come out is that, number one, people lack business skills, they lack business experience in running this business. It's one of the major contributing factors. This is according to research. So many people don't understand how business works. People have no skills in marketing. Somebody has no skills in human resource managing. And more importantly, research has also shown that lack of financial management skills, is one of the leading factors that contributes to the failure of these businesses. So the conversation around financial management in business is a giant conversation that can serve as a cure, in helping small and medium enterprises, including large corporations, to continue surviving in the business world. You need financial management. Now, colleagues and friends, the conversation about financial management is a broad one. It is a very big one, right? There are so many higher level studies that you can do in financial management in business. But what we have done this time around, we have reduced the conversation to only one part of financial management that I will talk about. Since we do not have all the time to talk about all the skills and all the key principles that underpin financial management, we are just going to talk about only one. And I am talking about cash flow management. So we want to talk about the cash flow management, because cash flow management is a big conversation, and we need to understand how cash flow is managed. Before I go any further, one more time, I want to confirm, are you able to hear me clearly? Anyone to confirm you can hear me?
No, sure, Director, we are getting you clear.
Okay, thank you very much for that confirmation. Now, cash flow management. The word cash flow is divided into 2 words, as you can see. There is cash and flow, right? Cash flow in basic definitions, we could say, is just basically the flow, the movement, if you may like to put it like that, of money in and out of the business. Simple. The coming of the money in cash into the business and the going out of the business is what you call cash flow. So cash flow management is one of the key, conversations that we hold in financial management. Now, one of the main problems that businesses face, when it comes to cash flow management, they include, number one, failure to manage or have sufficient cash inflows. So we are talking about money flowing into the business. And the studies have been conducted. One of the leading factors that has come out are as follows. Number one, having insufficient sales or not having enough sales. This is one of the serious problems. If the business is not making sales, believe you me, very soon that business is most likely to fail. If you are not making sales, or you are making sales but they are not enough to meet your expenditure, your monthly expenditure, then you know that you are most likely to fail in that business unless something is done. I'll talk about how to address these problems or the causes of these cash flow problems. Number two, I'll talk about not collecting your money from the debtors, on time, right? You find that there could be some of your customers that you may sell to on credit. And as the business grows, selling on credit may be inevitable. You may find yourself, making some sales on credit to some customers. Now, if you are unable to, recover the money on time, right? You are not able to recover this money, or they delay to give you money back, please, you are likely to have the cash flow problems. All right. Number three, what causes that is that the expenses that some businesses may have may be too high. All right. Having too much of the expenses, even unnecessary expenses, employed into the business, having too much of the expenses that you are incurring, that may lead you into cash flow problems. I'll talk about how to address them very soon. So if the business finds itself in a situation where they are spending more than what they generate, they are likely to find themselves in these what we call cash flow problems. They may not have capacity, to meet all their daily expenses. The other, challenge that may be there is bad inventory management. Bad inventory management. If the business is unable to manage their inventory, basically stock, we're talking about the business that work with stock. If they are not managing stock very well, the business is likely to have cash flow management, cash flow problems. And what we mean by, the business not managing the inventories very well, this is the message we are sending. You are keeping too much of inventories than necessary. Hence, you end up incurring extra or marginal costs. There are some costs that come as a result of keeping too much of inventory than necessary, okay? Or you are having too little of inventories. Therefore, you may not manage to meet some demands as they fall due. You are forced to go and buy from other suppliers that may supply to you, at a higher price because you just want to meet the demands of your customers. Those are some of the major problems that cause, the major causes of cash flow problems. Now, before we go further to the correction of the problems, let me one more time confirm you are able to hear me clearly. In online conversations, you have to keep on getting assurance that
We're
people
able
are
to get
following.
you.
Okay,
We're able
thank
to
you
get
very
you.
much. Thank you. All right. Now, about management, how do you now manage those problems, the cash flow problem? After this, I will show you a sample of a cash flow statement, how it is. Number one, To start with, manage your accounts receivable. Now listen, accounts receivable management is a very serious conversation in cash flow management. What is accounts receivable? Accounts receivable simply means, okay, let me put it like this, there are those customers that you can sell to on credit, right? The customers themselves that you have sold to on credit are called debtors. We call them debtors. But the amounts that they are owing you is what we refer to accounts receivable. So in other words, when we talk about accounts receivable management, we are making a point that you should be able to manage your debtors very well. Those people that you sold to on credit very well. That is to say, you're not supposed to allow them spend, a long time without them meeting or paying you. That is number one. Ensure that those clients that are owing you, they are able to pay you your money as soon as possible. Most of the businesses, they fail when it comes to this because, especially the startup, small and medium enterprises, you find that you have these challenges where you fail to separate yourself as a business owner from the business. Colleagues, number one, business does not have emotions. One. Two, the business does not have a relative. Three, the business does not have friends. So if you drag these relationships into the business, then people start owing you and you fail even to remind them that they are supposed to pay you. You even feel shy to, remind them to make payments and they have them pay you back quickly. You are likely to keep on facing the cash flow problems. So make sure there is a clear separation between you and the business and understand you're just an agent working on behalf of the business. The business is sending you, recover the money on time for the business, not for yourself, but specifically for the business. Okay. Number two, when it comes to inventory, those that are in businesses where they are selling goods and they're buying stock, colleagues, have just a reasonable level of inventory. Because if you have too much of the inventory than necessary, what you may have is, you are going to incur storage costs. They are also chances of you losing those assets through or those inventories by theft, or there are just many other risks that you are taking. And when you have too much of inventory, it means you're binding your cash. And so cash is not there, it is locked up into inventory. Therefore, you have all these goods, those inventories, the stock, too much of stock, but you don't have cash to meet the bills as they fall due. So it is very necessary that you have only enough level of inventories. Don't have too little, and again, don't have too much. Such conversations are held. There is also what we call cash management in the same business, cash flow management. You have to ensure that there is not too much of cash in the business than necessary and not too little of the cash. And I will highlight and I'll expand this point when I talk about cash flow, forecasts. Very soon I'll show you and highlight some steps in cash flow forecasts that are used. We have said that many businesses fail because people lack, this knowledge. Financial management skills is one of the reasons why businesses fail. Colleagues, if you want to run businesses, then it becomes very incumbent that you take, the learning of financial management is serious. at least enroll for financial management. For example, I hear Amazing Excellence, they do offer these courses like financial management. I like as a course, not what I'm just producing to is just a part, a fraction, a small part of what they teach, for example, in financial management. One of the reasons why people fail, again, we have said, is lack of business skills like sales and marketing. You don't know how to sell, you don't know how to manage. Amazing Excellence offers these courses such as sales and marketing. It's a course where you can learn in full how to sell, how to manage. Just a short course. Yeah, about 3 weeks, then you are done. At least you would have gotten some of the key, principles. Many people fail in business because they don't know how to read numbers, right? They can't manage numbers. Now, for you to understand numbers in business, you need some knowledge in finance, such as knowledge in accounting, a bit of accounting. Amazing Excellence offers financial accounting, where they train you basically in accounting and finance so that you can have at least the basics and the key principles that guide that world. You are able to read the financial statements, you are able to read numbers, because investors and all other people in the world of business, you know that we conversate about numbers, business numbers. So if you don't know numbers and you have not gone to school to learn numbers, or you haven't enrolled to learn numbers, it becomes very dangerous and detrimental. Very soon you find your business failing. Okay, I have talked about these things. Now, about insufficient sales, how do you address that? Right? Mainly when the business is just starting, it's bound to have very low levels of sales. All right? It's mainly likely to have very, very low levels of sales. And why should the business have very low level of sales? It's because, number one, the brand is not yet established. People haven't known it, or there hasn't been aggressiveness in marketing. The business has not been marketed very well. As it is said, as they teach in the marketing, in sales and marketing, they will teach you when you come at Amazing Excellence, for example, that if you appear today, you disappear again for 3 days. Immediately you disappear, people are bound to forget about you, forget about the business. So you have to keep on appearing so that you keep on, being there in the minds of the people. I wanted just to make mention of that one as well. So you need to market aggressively. You need to perfect the brand, work on the brand and the quality of the work that you are giving or the product that you are giving. Then ensure you have sufficient sales. And what is sufficient sales? Sufficient sales, colleagues, are those sales that will help you to meet all the monthly runnings. For example, you have a total bill. For example, you are a small and medium enterprise that runs maybe on 50,000 every month. That is when you include all the fixed costs, including the salaries of the people. Then you should ask yourself a question: how much level of sales are we supposed to make so that we are able to have enough money to meet the cash outflow? Basically, the fixed costs that you're incurring, the rentals, the salaries, and all these other costs that you're incurring. You need to understand how much sales are you supposed to make for you to break even. It's quite a bigger conversation, but in a nutshell, we are just trying to say, can you count all the costs? It is shocking to learn that some medium, small and medium enterprises, people are running the business, but they don't even know their total monthly cost. They don't know how much they need for them on advertising. They don't know how much they need on total salaries. They don't know how much they need on rentals. They just don't know their total cash outflow. You need to know your operating expenses and the fixed cost together so that you can have a clue on how much you need to make, how much level of sales you're supposed to make for you to break even. Okay, for you to be able at least to meet those expenses, not less than that level of sales. And every time you're pushing, you make sure For you to get a profit, you need to sell more than that number, not less than that number. Okay, that has been heard. About managing debtors, managing, accounts receivables. You could have, for example, incentives towards early payment. What incentives? For example, you can, give discounts for those people that pay early. Okay, or you could also introduce some penalties for late payment, right? You can just try to craft the terms so that these people are able to do what? To pay you right on time. For example, you could tell the people that if you paid within 10 days, right? You make payments within 10 days. Then, if you are able to pay within 10 days, we are going to give you a 5% discount, for example. And again, if you exceed, I'm talking about debtors management. If you exceed for more than 10 days, we are going to charge you a penalty. Let's say, for example, 10%. There'll be interest. For you, you need to put some interest. Okay, so that people are knowing all these consequences. You're just trying to design policy calculated at helping you recover your money as early as possible. All right. I'm talking about management of the data. The other key message that we can send is don't be shy of sending reminders. Let the reminders be sent on time. All right. For that you are able to recover the money. For example, you can remind the people towards the end of the month, maybe on the 25th, you write reminders. That is if people are paying monthly. You write reminders that, guys, 1 week from now, your payments will be due. Okay. And you wait for the exact day to come to see those who are going to make payments. And the following day, some people have not yet made payments, then you invoice them, tell them that your payment is overdue by 1 day. Okay. After 5 days, again, you remind them. That is if that is according to your policy, debt management policy. Then you should also make it clear to the clients at what point are you going to charge them interest when they fail to meet the bills. Anyway, this conversation about debtors management is a big one. It's a giant conversation that you hold actually when you come to Amazing Excellence, especially in financial management, where you will learn basically the whole science of debtors management. Is a whole topic, just how to manage debtors. But I'm just trying to share these in a nutshell. Okay, I have said you can learn these things in financial management. Just 3 weeks is a short course, obvious, or do accounting and finance. Just 3 weeks as well is a short course, half course. Yeah. We want to learn about sales and marketing. There is a short course for sales and marketing. I have already highlighted that. Okay. Then about having too high expenses. Know what we call relevant expenses and those expenses that are not relevant. All right. There are some of the expenses that you incur that are not relevant. Okay. Ensure that you capture only those relevant expenses. This time around, integrate machine learning, integrate AI, artificial intelligence, to make sure that you ask every time you're working, ask yourself a question when you're in position management. Is there any way of doing this at a lesser or the lowest possible costs? Is there any way of avoiding costs? If there is a way, please try by all the means to avoid costs. Now, before I transition, we are almost coming closer to the cash flow forecasting. I'm talking about cash flow forecasting very soon, quickly. Before I talk about cash flow forecasting, let me just hear if people are enjoying the conversation. I just want to get feedback if people are following the conversation. Are we still connected? Are we good? Say we are good.
Yeah, good.
All right. Let's say continue. How do you forecast cash flow? Now, what is cash flow forecast? Cash flow forecast is basically an estimate of how much money you're going to spend and how much money you're going to receive. That is what cash flow forecast is all about. It is an estimate, right? An estimate. You should have an idea, please, all right, of how much you're going to spend as a business. And actually, businesses plan that are successive, that succeed, that manage to survive. They plan very well and plan meticulously, right? They do plan meticulously, very well. They know that in the first year, this will be our total expenditure. Like in the first month, we're going to spend this much on salaries, this much on rentals, this much on what. They have that expenditure, that estimate, and they try by all the means to work within the forecasts. All right. They also forecast the sales. Now, let me talk about sales forecasts. Sales forecast, colleagues, the principles are as follow. When you're, forecasting sales, number one, be conservative. What does it mean to be conservative when you are managing, the sale, when you're forecasting sales? It means that be realistic. If anything, don't, even if you know you're going to make a lot of sales, try to forecast that you're going to make low levels, of sales. Don't be unrealistic and say you make 1 million sales when you know you have made 0 sale this time around. Try to be conservative. Limit, lower as much as possible your expectation. Meanwhile, you're also working hard to go beyond the expectations. This will help you in cash flow management. Use the previous year's numbers. I'm just trying to give a guide in cash flow forecasting. Use previous year's numbers, all right? Take advantage of the previous years, Also take into account some seasonal fluctuations when you're forecasting sales. What does it mean to take into account some seasonal fluctuations? That, colleagues, simply means when your business makes more sales and when it goes down. There are some seasons, most of the business are seasonal. In some seasons, you make more sales, there are more people buying. Some seasons, it goes down. You should account for all these when you're forecasting. Don't just forecast and, we'll just be making 100 every month or maybe 1 million sales every month. No, 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 no. It should not be done by that, like that. Account for these seasonal fluctuations. Those are some of the guides. You learn this when you enroll, for example, at Amazing Center to do accounting and finance. We'll talk about cash flow management in details. I'm just trying to highlight some of the few things they discuss there. Consider cash flow forecasting as well. That's very, very important in sales forecast. Then also forecast your costs. Now, when it comes to forecasting of the costs, what of it, the forecast of the cost should be just a percentage of the sales that you need to meet your costs. You know how much do you need, how much cost are you going to incur? Have a forecast of that, all right? You can use previous year's numbers, or you can compare with what other similar businesses are doing and how much cost they incur, or you can compare with the industry averages. That science is taught in financial management. Then, colleagues and friends, you need to also focus for the operating expenses. And what do we mean when we say, forecasting for operating expenses? There are those daily expenses that you need to do. But when you're forecasting expenses, the rules are: number one, please do not be conservative now. Don't be conservative. What that means is that do not, forecast a small level of expenses. Try to exaggerate, if possible, for lack of better term, the expenses. Try to always, put more expenses as you are trying to forecast. That will help you. And again, add the contingencies. Those are unplanned and foreseen circumstances. You need to plan for them. Have to factor them in as well as you are planning your cash flow focus, colleagues. If you are going to buy, for example, an asset, you should also consider that, put that on the plan that this particular year we're going to buy an asset. Right now, what I'm going to do quickly is just to confirm you are able to hear me. Then I want to show you an example or a sample of a cash flow forecast, just for the sake of illustration, that you may get a clue. Any questions? Not yet questions. Can you just confirm you are able to hear me clearly?
We are able to hear you. Thank you.
Thank you. Thank you for that confirmation. Let me just go straight now to showing you a cash flow focus and a sample, just a sample. All right. Have we seen it? Are we able to see it? Are we able to see the screen?
Sure, we're able to see.
Sure.
Yes, cash inflows. This is a sample of the forecast. Cash inflow simply means the cash that is flowing into the business. So the forecast was they will receive from sales, right? 30,000 in January, 32 in February, 35 in March. This is just a forecast. You can do those forecasts for your own businesses, and you can do for the whole year. People do or for the whole year. This is just for one quarter. You can extend you do for the entire year based on numbers. But you need to come and learn basically, or learn somewhere how these numbers are reached at. Don't just guess numbers. You need to use data. All right. There are some formulas that we use, and there are some things to consider as you are, projecting these cash flows. Loan received. They were expecting to receive a loan on February, none on March, and January. Other incomes, from other sources, they expected to receive 500, 300, and 400 from January, February, and March, respectively. So then you tot up, this is the total cash inflows for, like, total cash flowing into the business for this particular period and for these respective months. Here we are good. We can go to cash outflow. Now, cash outflow is showing you how much money is flowing out of the business and for what reason. Number one, inventory purchases. This is how much was spent on inventory, buying inventories, January, February, and March. This is how much they spent, right? On salaries, they were paying, usually salaries are fixed. So they were paying this amount, right? They were paying 5,000. This is just an example. Rent, how much are you projecting to pay for rent? This is fixed as well most of the times. Utilities, that is payment for water, electricity, and all those things, factor them in. Marketing, how much are you spending on marketing, advertising, all that much, put a forecast. Loan repayment, if you have a loan and you're paying, making some repayment, how much are you going to be making as payment? And miscellaneous, these are just small other expenses that demand cash outflow. Basically, you ask yourself a question, how much of these are going to take money out of that? Then you consolidate, colleagues. You add for January, for February, and for March down here. This is total expenditure. This is total amount that you are spending now. You should have this idea, all right? And this is not just all. You can put all the expenses. You are going to buy an asset, please put that, all right? Put all cash outflows, cash outflow, anything that is going to take out money and how much it is projected to take. Businesses are advised to have cash flow forecast for the entire year, the whole year, all right? You should know how much you're going to spend on salaries. Don't just dream. You should have ideas of where the money is going to come from, all right? And be realistic. Then this is net cash outflow, basically the difference now between, cash inflow minus outflow. How much came in January and how much went out? Then what remained, the remainder was 5,500. In February, they had the net cash flow, the difference between how much came in and what went out is 15.6 and the 6,100 in March, like that. When you do these differences, at least you are moving with the numbers, right? You are doing things with the numbers. This was just a sample of cash flow forecast. It's not really all. Yeah, they're comprehensive. There is a comprehensive pro forma of a cash flow forecast that we can make, that you will discuss when you enroll or when you come to study with us, for example, in financial management. You learn these things in details. Like you learn a comprehensive one. This is just a basic one to give you a clue and have an idea. Colleagues and friends, there is so much that has been said, but here is the conclusion of the whole matter. We have said that so many businesses, especially small and medium enterprises, fail within the first 3 years and they don't live beyond 5 years. Usually it's because they lack business skills. If you are planning to run business, please, it's not optional for you to learn how to manage businesses, getting business skills, sales and marketing, learning financial management. That is not optional for you, because those are some of the main reasons as why people, these businesses fail. We also made mention, colleagues, that cash flow management is a key conversation, and you need the science of how forecasting of cash flows is done. You should be able to rely on these, know the numbers very well. I wish we had more time. I could have gone ahead now and started showing you how to read numbers and what are some of the key numbers that really matter in business. Maybe Amazing Excellence or other organizers will organize another conversation next time. I may have that time to talk about the key numbers that we should fix our eyes on to see whether the business is really growing or is not growing, or is stagnant, or is going into the ditch. You need that idea. You need that understanding or that skill. That skill can be dispensed at that time. It's only that the time is up. As for now, let me just end here and hand over to the moderator. Thank you.
Wow, wow, wow. That was powerful, Mr. Arion. That was very, very much powerful. Every day we are growing and we keep on learning new things, and things which will help us actually, not just in business, but even actually at the personal level. You know, I personally have been taking things for granted, where, especially on giving, uh, you give like an alarm, or rather reminders to the debtors. You take it for granted people are just borrowing money, and you don't even take time to remind them that you guys, you need to bring back the money that you borrowed, taking it for granted that because someone maybe is a relative or maybe they are friends. It's something which have really killed a lot of businesses out there, for people not being able to pay back the debts. And of course, you also talked something to do with